for placing oxygen mask. Over nose and mouth. Thank you.
And enjoy the flight.
When you think of the power of Wall Street, familiar images most likely come to your mind. Towering Manhattan skyscrapers, aggressive traders in expensive suits, the signboards of century-old banking conglomerates like Goldman Sachs or J.P. Morgan. Or perhaps you imagine giant black box funds like BlackRock, with trillions of dollars of client money under their management. Those who manage other people's capital and whose names regularly appear on the front pages of financial publications are always in plain sight. But in the very heart of this financial ocean, at a depth where the sun's rays and the camera flashes of journalists never penetrate, there exists a true ghost. New York, the Lower Manhattan District, the building at 250 Vesey Street. There are no massive gilded signs here. Passers-by walk past these doors every single day without ever realizing that behind them hides a closed club that, entirely on its own, processed a trading volume of $10.5 trillion in a single year. $10 trillion. That is more than the gross domestic product of most of the world's developed nations combined. This is a company that does not take money from outside investors, does not advertise its services, and does everything possible to ensure you never hear about it. Its name is Jane Street.
Jane Street.
Jane Street.
Jane Street. For manipulating Indian markets.
The regulator is barring Jane Street from access to its local securities.
This is not just another firm on Wall Street. This is the most expensive, most profitable, and most secretive market-making corporation in history. Classic financiers do not work here. Instead, they hire math geniuses, winners of international programming Olympiads, and professional poker players. They have turned global trading into a giant mathematical equation. They make billions of dollars where ordinary people see only chaos, and they use a rare academic programming language to ensure their robots never make mistakes. How did a group of geeks manage to subjugate the global market? Why did they unleash a secret lawsuit war in 2024 that terrified all of Wall Street? And what price did they pay to keep their secrets buried deep within digital code? Welcome to the full investigation into the invisible masters of the global market. To understand the phenomenon of Jane Street, one must completely erase the image of the classic investor from memory. An ordinary investor, whether it is a private individual with a phone or the manager of a massive pension fund, is trying to guess the future. He analyzes reports, looks at charts, and thinks, will Apple shares grow next month? Is it worth buying Bitcoin now before it becomes more expensive? This is a game of predictions, where there is always a risk of making a mistake and losing everything. Jane Street does not try to guess the future. They do not care where the market goes, up or down. They built their business on a concept called market making and high-frequency arbitrage. Their main goal is to find microscopic, barely noticeable price anomalies that exist for fractions of a second and profit from them millions of times a day. The main field of their battle is the so-called ETFs, or exchange-traded funds. An ETF is essentially a ready-made basket inside of which lie the shares of hundreds of different companies. For example, you have a fund that replicates the index of the largest American enterprises. Inside this virtual basket lie microscopic fractions of shares of Apple, Microsoft, Nvidia, and hundreds of other giants. The basket itself is traded on the exchange as a single individual stock. In an ideal world, the cost of this basket should exactly equal the sum of the value of all the shares that lie inside of it. But the real world is not ideal. Millions of people every second buy and sell both individual stocks and the funds themselves. Because of this, a mathematical gap arises. For 1/1,000,000th of a fraction of a second, the price of the basket on one exchange might be, for instance, $100.01, while the actual value of the shares inside it on another exchange is exactly $100. An ordinary person will never notice this 1 cent of difference, and technically would not even be able to take advantage of it. But Jane Street's algorithms notice. Within nanoseconds, their trading robots buy the cheap shares, instantly package them into the fund, and sell this fund 1 cent more expensive. 1 cent of profit is nothing. It is dust. But when you execute such mathematically precise, absolutely risk-free trades millions of times a minute, 24 hours a day, this dust turns into a gigantic golden torrent. Jane Street's trading robots are connected directly to the servers of the world's largest exchanges in New York, London, Tokyo, and Hong Kong. They provide liquidity, meaning they act as a constant buyer and seller for any person on the planet. When you need to urgently sell a stock or a fund, with a huge probability, it is precisely the Jane Street algorithm that buys it from you. They take a tiny commission for the risk, turning into an invisible digital tax on any financial movements in the world. And here lies the most striking documentary fact. The worse things go in the global economy, the more money Jane Street makes. When panic begins in the markets, when indices fall, currencies collapse, or geopolitical catastrophes occur, ordinary investors lose trillions. But for Jane Street, panic is the best season of the year. In moments of panic, the price gaps between exchanges become massive, and trading volumes skyrocket to the heavens. In the first half of 2020, when the planet was gripped by fear of the pandemic and the stock markets were experiencing a profound shock, Jane Street recorded a record net revenue. While world governments were frantically printing money to save businesses, a closed group of mathematicians from New York earned more in a few months than in several previous years combined. They are true predators of volatility, fueling themselves on chaos. If you open the list of job vacancies at Jane Street, you will experience a slight bewilderment. You will not find requirements for deep knowledge of corporate finance or macroeconomics. The company practically does not hire business school graduates with classic MBA degrees. Instead, their recruiters spend years hunting for a very specific type of person. Their targets are winners of international Olympiads in mathematics, physics, and programming, theoretical scientists from the Massachusetts Institute of Technology, Princeton, and Cambridge, as well as professional poker players. The selection process at Jane Street has turned into a legend that terrifies young specialists. Interviews here do not resemble ordinary interviews. The applicant is not asked about his past achievements. He is placed in front of a blackboard and forced to spend hours solving the most complex probability problems in his head under intense psychological pressure. You might be asked to calculate the exact probability of a specific combination falling out of a deck of cards if 3 cards are already open and it is raining outside, and you must do this in 5 seconds. The company is not looking for those who know formulas from textbooks, but for those whose intuition and brain work like a high-speed risk calculator. But the most amazing documentary fact is revealed when we look at what happens inside the company after hiring. In the Jane Street office, there is a real, unquestionable cult of complex board games. New interns and experienced traders are regularly sat down to play against each other in poker, chess, or games like The Settlers of Catan and Mafia. However, the rules of these games are modified by the management on the fly. During the game, employees are allowed to create virtual futures on the hidden cards of opponents, trade resources that do not yet exist on the board, and enter into complex wagers, putting up real money from special corporate funds. Why is this necessary? The company literally rewires the human brain. It forces its employees to perceive absolutely any life or market event exclusively through the prism of mathematical expectation and probability theory. A Jane Street trader has no right to act on emotions or hope for luck. Every step he takes in the office is a cold calculation. What is the risk? What is the potential profit? And what is the mathematical probability of success? This unique human culture governs an equally unique technical infrastructure. While practically the entire financial world of Wall Street writes its trading robots in C++ or Python languages, Jane Street carried out a technological revolution that many considered madness. They transferred their entire colossal infrastructure, which processes trillions of dollars, to an ultra-rare academic programming language, OCaml. OCaml is a functional language that is used primarily in scientific laboratories and for the verification of complex systems, for example, in the aerospace industry. It is incredibly difficult to learn and write code in, but it has one fundamental advantage over Python or C++. The structure of OCaml is designed in such a way that logical errors in the code are detected at the writing stage, before the program is even launched. On Wall Street, catastrophes regularly occur when, due to a single typo by a programmer, a trading robot goes insane and drains hundreds of millions of dollars in a few minutes. The use of OCaml completely protects Jane Street from the human factor. Their code is monumental and pure. This allows them to release new trading algorithms to the market faster than any of their competitors. While other companies spend hours testing their programs, fearing glitches, Jane Street rolls out mathematically flawless updates in minutes. The combination of brilliant human brains, trained on poker bluffs, and the perfect mathematical code of OCaml has created an invincible digital machine. For a long time, this perfect strategy worked flawlessly and quietly. Year after year, the company generated billions of dollars in net profit, distributing it among a narrow circle of owners and employees, and never appeared in crime chronicles. But in the early 2020s, the shadow of Jane Street unexpectedly fell upon the loudest, most destructive, and largest-scale financial scandal in modern history. A scandal that forever changed the global cryptocurrency industry. The man who caused this chaos was Sam Bankman-Fried, the creator of the once gigantic cryptocurrency exchange FTX and the fund Alameda Research. In 2022, his empire collapsed with a crash, burying more than $10 billion of client money beneath it. Sam was arrested, tried, and sentenced to a lengthy prison term for large-scale fraud and theft of funds. The whole world watched the trial of the guy in the wrinkled t-shirt, wondering how a young student could so easily string along the planet's largest venture capitalists. But if we open the official dossier of Sam Bankman-Fried and look at his biography, we discover a direct connection to the object of our investigation. Sam was not an accidental, self-taught genius. He was a purebred, perfect product of the Jane Street system. Sam came to Jane Street immediately after graduating from the physics department of the Massachusetts Institute of Technology in 2014 and worked there as a trader for exactly 3 years. It was within these walls that he went through that exact same harsh school of brain rewiring, learned to play poker for millions of dollars, evaluate risks in nanoseconds, and work with algorithms. But most importantly, it was precisely inside Jane Street that Sam Bankman-Fried first saw the gold mine that later made him famous. Moreover, his closest associate and the head of the Alameda Research Fund, Caroline Ellison, who subsequently became a key witness for the prosecution against Sam at the trial, was also a trader at Jane Street. They met and worked in the same team in New York, absorbing the culture and methods of this secretive company. When Sam left Jane Street to create his own fund, Alameda Research, he effectively copied and transferred their main strategy to the wild, unregulated, and chaotic cryptocurrency market. In 2017, Bitcoin was experiencing a massive surge, but the crypto infrastructure was weak. On one exchange in the US, Bitcoin could cost $10,000, while on an exchange in Japan, due to delays and a shortage of liquidity, it cost $11,000. The difference was an insane 10%. This was the exact same arbitrage that Jane Street specialized in, but multiplied thousands of times over. Using the methods of his former company, Sam earned his first tens of millions of dollars in just a few months, simply moving cryptocurrency between countries. However, court documents and journalistic investigations uncovered a far more intriguing documentary fact. Jane Street did not just let its employee go to engage in crypto. It stealthily entered this market itself as one of the very first among the traditional giants of Wall Street. While official figures of major American banks publicly called Bitcoin a bubble, a scam, and a tool for money laundering, the mathematicians at Jane Street saw crypto as the ideal environment for their OCaml robots. There was colossal volatility, constant panic, and massive price anomalies. From internal reports that surfaced during the FTX bankruptcy, it became clear that for many years, Jane Street had been one of the largest invisible market makers in the digital asset market. They provided liquidity for hundreds of crypto tokens, executed trades worth billions of dollars a day, and earned enormous money in complete shadow, hiding their presence behind complex offshore structures. The disciples of Jane Street built a crypto empire that ultimately burned down, but the parent company itself stepped out of these waters absolutely dry, taking its gigantic profit with it. It seemed that this structure was impossible to shake, and its secrets were securely protected by non-disclosure agreements and complex software code. But in the first half of 2024, the iron wall of Jane Street's secrecy suffered its most powerful and dangerous fracture in the entire quarter-century history of the firm's existence. A real bomb exploded in the American judicial system. The company Jane Street Group filed an official lawsuit against one of the most aggressive and largest hedge funds in the world, Millennium Management, which has over $60 billion under management. This lawsuit instantly captured the gaze of the entire global financial elite because it violated the main rule of the closed club: never wash dirty linen in public and never show your algorithms publicly. The reason for Jane Street's fury was the resignation of two of their leading traders, Douglas Shadegg and Daniel Pacliffa. These individuals had worked for years in the company's most protected and profitable department. In early 2024, they accepted an offer from competitors at Millennium Management, packed their things, and left, taking with them what Jane Street in official court documents called its intellectual property of the highest order, a commercial secret of exceptional value. The essence of the lawsuit was unprecedented. Jane Street accused its former employees of literally stealing a secret trading strategy that a team of mathematicians had been developing and perfecting for years. The company's lawyers argued that this strategy was so powerful and unique that it allowed the firm to earn hundreds of millions of dollars a year with a practically 100% guarantee and without significant risk. But the most interesting part of this story is exactly how the judicial process was conducted. It was a real detective story in real time. Jane Street demanded that the judges classify absolutely all details of the case. They refused to state out loud even the code name of the stolen strategy, the types of assets it traded, and the financial markets on which it was applied. In open court transcripts, entire pages of text were simply blacked out with a marker. Representatives of the company declared, if the parameters of this strategy become known to competitors or the general public, the market will instantly adapt. The magic of the numbers will vanish, and the firm will suffer irreparable, colossal financial damage. However, despite all attempts to hide the details, during the fierce court hearings, part of the information still leaked into the public domain, providing fuel for investigations by leading economic publications. It turned out that this ultra-secret mathematical model was deployed in an emerging and extremely complex market, the options market in India. The Indian stock market in recent years had been experiencing an explosive boom in retail trading. Millions of ordinary citizens of India were downloading mobile applications and starting to aggressively buy options, attempting to get rich quickly. A gigantic, chaotic, and incredibly volatile flow of transactions emerged. Ordinary investors made millions of emotional, foolish, and mathematically incorrect moves. And while the whole world was looking at American technology giants, Jane Street's robots, programmed in OCaml, sat quietly on servers in Mumbai. Within nanoseconds, they read the mistakes of Indian retail investors, took their money, and generated over $1 billion in net profit per year for the New York office from this single source alone. This judicial precedent pulled back the main terrifying curtain on how the modern world is structured. We are used to thinking that the stability of the global financial system, currency exchange rates, and the value of our savings depend on the decisions of presidents, statements by finance ministers, or meetings of the U.S. Federal Reserve System. But this investigation proves the opposite. Today, the real power over global wealth lies in the hands of faceless, closed corporations. It belongs to secret mathematical equations, complex probabilistic models, and uninterrupted code locked on servers in fortified data centers. Every second while you sleep, work, or drink coffee, Jane Street's invisible algorithms execute millions of trades, moving trillions of dollars across borders and imperceptibly taking their tiny fractions of a cent from every movement of humanity. They do not build factories, they do not create tangible products, and they do not try to change the world for the better. They have simply turned our entire reality into one big, endless, and incredibly profitable board game. A game in which the rules are set by them alone.